In the wise words of our old friend Dr. Seuss, the more you read, the more you'll know. The more you learn, the more you'll grow. Just 2 weeks ago, I was able to purchase my family's first rental property to put into our portfolio, which we put into our trust. Here's the property. I bought this property sight unseen. I've never been to Akron, Ohio, but the property prices compared to the rental prices just made so much sense. The house was turnkey, which means it was already fully renovated, and there's already a long-term tenant in the property with proof of good rental payment history. And so we were able to purchase this property and cash flow immediately. The best thing about this is I was able to purchase this property with no money out of pocket. Now, how was I able to purchase a rental property that I've never seen with no money out of pocket? Well, in 2020, I read this book that talked about how the rich get richer and how they create generational wealth. Now, we all talk about financial freedom and generational wealth, but this book right here, Would the Rockefellers Do, really breaks that down and brings you inside of the financial planning strategy for one of the wealthiest families in America. If it wasn't for the Rockefellers, we probably wouldn't even be talking about things like generational wealth. If you don't know who the Rockefellers are, I suggest you do your homework, but in a nutshell, they are, again, one of the America's richest families. They built their fortune through industrial investments and oil. And so you can imagine the money is really long, super duper long, to the point where they were able to create generational wealth that's not only talked about to this day, but they found it very important to put into a book so we can receive this information. Now, the strategy that I learned from this book was cash flow banking insurance. You've probably heard that before, right? How people talk about insurance is so important, but we don't take advantage of that. You know, most people just get term life insurance, which is really cheap to get a high amount policy, and that's fine. I have term life insurance as well, but it's also very important for us to get whole life insurance policies, and not just traditional whole life insurance policies, but guaranteed whole life policies with cash flow banking possibilities. In this video, I'm just gonna break down a couple specifics about my cash flowing insurance policy and things that I like about it, how you can start this for your family, and then I'll end it off explaining how I was able to take the cash from this policy and purchase this property that I just showed you guys. What would the Rockefellers do? Legacy, sustainable wealth, cash flow, impact, freedom, and cash flow banking. That's what we're gonna talk about. What would the Rockefellers do? How the wealthy get that way and stay that way, and how you can do it too. All right, y'all, story time. What cash flow insurance really means. So I'm not gonna read this whole book, but I am gonna read this top paragraph just as an intro. So what exactly is cash flow insurance? The financial strategy at the core of the Rockefeller method. It is a very particular and specific way of setting up whole life insurance policies that allows them to be supercharged. It is a way to grow your money almost effortlessly and to have it work for you without having to worry about market loss. It is a banking system that gives you stability, security, and liquidity. Very important when you talk about investing in real estate. Before we get started, disclaimer. I am not an insurance broker or a licensed financial advisor. So I'm not giving y'all direct advice that you should absolutely 100% go out and do. I'm going to tell you guys what works for me, what the pros and the cons are, and how it can potentially be beneficial to you. But any information that you pick up in this video should be verified by another source, and you should reach out to an insurance broker or financial advisor if you have one to, clarify some of this information and make sure that you are getting the correct policy. If you are interested in the guaranteed whole life cash flow banking insurance policy, my personal policy is with PM Mutual. The same guy who set up my whole life insurance helped me establish my trust. And so my trust is now the beneficiary of my insurance policy. So if I cloak over and pass away, all of the proceeds and the cash value for that will go directly to my trust. That is then, of course, broken down into how that money will be divided, with my wife, of course, being the executor of that trust. Now that that's out the way, here are a couple things that really stood out to me when I was presented this information. That's what I want to share with y'all. So guaranteed whole life cash flow banking insurance policy, what that pretty much means is I have life insurance, and let's just say my benefit is $1 million, my death benefit, okay? So if I die, my family will get the $1 million. But one of the cons about this policy, guys, is that it is expensive. It will turn into another bill, especially if you want to supercharge the policy like they suggest in the book. If you want a high premium policy, 7 figures or above, like my policy is, then you're going to be paying anywhere from $600 to $1,000 a month just for the insurance premium alone, okay? That's not for the supercharging. That is just for protecting your premium benefits in the event that you die. Now, the adder to this is you get the option for PUA, which is paid up additions. For me specifically, my premium monthly payment is $600. However, I can pay up to $1,400, and the extras will go towards my paid up additions, which gain interest and dividends over the lifetime of my policy. And so depending on how much extra you pay up or supercharge your account, that is going to be the determining factor on how fast you build up the cash value in your policy. Now, this is different from your death benefit. Now, the biggest benefit is your death benefit will also increase the more you pay up those additions, all right? So you may have started with $1 million policy that grows into a $1.5 or $2 million death benefit policy because you're continuously paying into it. But what we're talking about and what's more important is those paid up additions going directly towards your cash value, which you will be able to borrow from. Now, I've had my policy for 4 years, so I paid up a lot of additions over the course of 4 years to get me to the point where I can take money out to be able to purchase a property. But you know, it might take you 1, 2, 3 or more years to build up the cash value to where it makes sense to borrow against the policy. The account itself is typically going to grow at about 4% interest, which is great, all right? It's not the best interest rate, but it's really great compared to some of the other benefits that you get, because not only is the policy going to accumulate interest, but it's also going to pay a dividend for the money that you have sitting there. So that's interest and dividends being paid just from paying up your insurance policy and pretty much putting extra money into your own cash flow banking system. Now, I mentioned that the policy will grow at least 4% interest and pay you a dividend. Now, one of the best features is you can access your money with no penalties. If you have a 401k or IRA or a brokerage account and things like that, or a CD account, or have your money in the bonds, and you get into a crisis or a jam and you need to access your money really quick, you can get the money, but it's going to come at a 10%, 12% tax against you just to take out and use your own money. But with the insurance cash flow banking system, you can take your money out with absolutely no penalties. And what that means is instant liquidity, meaning you can get your money instantly. You can turn it from insurance premium to cash. You can liquidate it with no hassle. And I don't know if you've ever invested a large sum of money, but if you plan on investing a large sum of money, you want to be able to access your cash in a way that it is liquid. You don't want to have to sign a bunch of papers, go through a bunch of hoops, and be charged to use your own money. That's just crazy. Another pro to this strategy is when you build up that cash value and you're ready to borrow money, you're not borrowing money from the policy, you're borrowing money against the policy. So what this means is even when you take that money out, the account will continue to accumulate interest and give a dividend even without the money being there. So let's say I have $100,000 cash value in my policy and I say, all right, I'm going to buy a $100,000 car. So I take out that $100,000. It's not like the account goes completely to zero. No, the account is going to continue to accumulate interest and dividends on that $100,000. So your account is going to continue to grow as if this lump sum is still in the account. I don't know where else you can do that. On top of that, as if that's not enough, on top of that, the money that you borrowed against the policy, pretty much from yourself, you don't have to pay back if you don't want to. Now, let's say you have $1 million death benefit and you have $100,000 in cash value that you borrow against the policy from yourself. You've got that 100,000, and let's just say, God forbid, you die the very next day without paying that money back. No problem. Now, instead of your family getting $1 million as your cash benefit, they're just going to get $900,000 as your cash benefit, because the policy will subtract the money that you took out. You never have to pay it back. Now, you can pay it back just to have that cash value there and be able to borrow from it again when you're ready, but it's your money. It's your policy. If you never get around to paying it back, so what? It's not going to go on your credit. It's not going to affect your policy, because your policy, in fact, is going to continue building up cash value, because remember, it's still paying you interest and dividends for that 100,000, even though it's no longer in the policy. Another pro to this strategy is there is no capital depreciation. So if you have a 401k or IRA or bonds or a money market account, things like that, your account value is going to fluctuate based on a performance of the stock market. Well, not with cash flow and insurance. The insurance is going to continue to pay that same interest and continue to pay that same dividend. It might fluctuate, but you're never going to get less than the minimum interest and dividend payment that they can make. It's not going to go to zero. It's not going to go to negative. So your account will continuously grow throughout the life of the policy. You don't have to worry about it going down 50% if the stock market just all of a sudden crashes because we go to war. The money is protected. So now we talk about an investment with stability, predictability, and liquidity. What more can you ask for? Now, the process of borrowing the money against my policy was super easy. I mean, I have an online account. I simply went to the online account on my phone. It shows your cash value and it shows how much you can get in the loan. I simply went to that, typed in how much of my loan value that I wanted to get. They approved it immediately and then sent me a wire within 2 days. I didn't have to talk to anybody. I didn't have to sign any documents. I didn't have to be approved. I simply went online, requested the amount of money that I wanted, and it was deposited into my bank account. So for me, my family already understood the value of having life insurance, but then when I figured out that we could supercharge our investing and saving with this strategy, it was an absolute no-brainer for me after reading this book. How it worked with the deal. So when I first got on TikTok, I ended up meeting this guy who was wholesaling real estate the same exact way that I do, except for he was doing it in other states. We kind of had some conversation back and forth, never went anywhere from there, but about a month or so before Christmas, he reached out to me. He said, "Hey, Andrew, I have this deal in Ohio. It's a turnkey rental property. There's already a tenant in there paying rent. The house has been renovated. It's in good condition. I mean, it's a great deal at a great price. Would you like to take a look at it?" I said, absolutely. It's already been a goal of mine for the last few years to get a rental property. I have gotten to the point where I'm okay with it not being in Dallas because the properties are so expensive and it's hard to cash flow. So I was open to the idea of investing out of state. This deal came across my desk. And since it is already a remodeled property with a tenant inside, I couldn't get a traditional hard money loan because that's usually used to flip a property. So I had to get a traditional 30-year mortgage loan. And when you get that traditional 30-year mortgage loan for an investment property, you typically have to pay 20 to 30% down in cash in order to get that mortgage loan. Me and my wife had just discussed that we weren't going to get anything for each other for Christmas because we have been budgeting and saving and we wanted to pay down some debt and we have some other goals we wanted to tackle. So we were going to take care of the kids for Christmas and just skip over buying gifts for ourselves and over consuming. And with that in mind, I thought, man, what better gift to not only get my wife, but our family and our trust other than our first rental property. So I told the guy from TikTok, I said, hey, send me over the information. Let me take a look at it. I reviewed the information, did my numbers, put everything into a rental calculator. It came out that we were going to cash flow. It made perfect sense for me. The only thing was I needed 20% cash up front to be able to buy into this deal. Now, I didn't want to go into our savings account or under the bed or into my checking account because me and my wife had just discussed not using our personal funds to purchase anything until we reach some of these goals that we're after. And so to me, I'm thinking, okay, how can I come up with 20 grand to be able to put down on this house? And it hit me immediately. I'll just borrow the money from myself for my cash flow insurance policy. That's exactly what I did. So I ended up finding a lender, getting the property under contract, going to title, going through that whole transaction, went through that process, closed on that deal, and now we are the happy owners of our first rental property in Akron, Ohio. In addition to me still earning interest and dividends on the money that I borrowed against myself, now I also have a hard asset in a real estate or real property, and I'm getting cash flow every month from a tenant who's living there paying down my mortgage, which means that I'll have more equity in the house as well. So reading this book and learning this strategy enabled me to purchase a rental property, a hard asset that I'm not only cash flowing every month from, but I also have equity in the property because I bought the property cheaper than what it's worth or what it appraised at. So I won several times in this transaction, and that is the power of preparation meeting opportunity, being able to strike at the right time. So if you have the ability, I highly suggest you open up something like this cash flow insurance policy, start putting money in there, do the paid up additions, supercharge your account. Again, it's not gonna be cheap, but it can be really worth it if you continue to do that till an opportunity crosses paths with you that just makes hella sense to borrow that money from yourself and go ahead and invest and increase your financial situation just like I did. If I had not read this book and had not taken action and set up that policy and put myself in position, I would still be talking to my wife about, man, one day we're gonna get our first rental property. One day the opportunity is gonna come. Maybe we'll dig into our savings or into our joint account and take out $20,000, $30,000, or, you can do it the smart way. But that's it, y'all. I highly encourage you to go and pick up this book. It's a super simple read. Let me see. 150 pages in the whole book. You can read this in no time. You can take this information, run with it, set yourself up, set your family up for future success, all right? Again, this is a strategy that is going to take some time, but if you don't plan on dying anytime soon, it may be a strategy you want to look into. Reading this book, purchase my first rental property. If you got any value at all from this video, and it would be hard not to, go ahead and smash that like button, hit the bell notification so you get notified every time I drop game just like this, which I'll be doing on a weekly basis, and subscribe to my channel so we can grow together. My subscriber count has really went up over the last couple months, and I recognize this because y'all like consistency. So I'm going to give y'all that consistency and that value week after week, and I appreciate every like, every comment, every subscription, because it just encourages me to continue putting out this information that's hopefully helping somebody else, which is the reason I'm here in front of this camera. Until next time, y'all, tap in.